Is the US economy on the brink of a recession? That's the question on everyone's minds. It seems like yesterday we were celebrating record low unemployment. Now, experts are warning of a potential downturn. The culprit? Some point fingers at President Trump's economic policies. The stock market is a roller coaster. Consumer confidence is plummeting. And economists are losing sleep. Have the administration's policies backfired? Are we headed for an economic storm? Section 2, Tariffs, a risky gamble? One of the most controversial aspects of Trump's economic strategy has been his use of tariffs. These tariffs were aimed at leveling the playing field for American businesses, which Trump argued were being unfairly undercut by cheaper foreign imports. The idea was to make imported goods more expensive, thereby encouraging consumers to buy American-made products. The goal? To protect American jobs and industries from foreign competition, particularly from China. By imposing tariffs, the administration hoped to revive industries that had been in decline for years, such as steel and aluminum manufacturing. This was seen as a way to bring back jobs to American soil and reduce the trade deficit. Sounds good in theory, right? The idea of protecting domestic jobs and industries is appealing, especially to those who have seen their livelihoods disappear due to outsourcing and globalization. However, the reality is far more complex. But tariffs are a double-edged sword. While they can provide a temporary boost to certain industries, they also come with significant downsides. One of the most immediate effects is the increase in prices for goods that rely on imported materials. While they might protect some domestic industries, they also lead to higher prices for consumers. This is because companies that rely on imported goods or materials often pass the increased costs onto consumers. So, while a tariff might help a steelworker keep their job, it could also mean that the price of a new car goes up. Think about it, that new TV or those imported car parts just got more expensive. This can lead to a decrease in consumer spending, which in turn can slow down economic growth. Additionally, other countries often retaliate with their own tariffs, leading to a trade war that can further harm the economy. So, while tariffs might seem like a good idea on the surface, they come with a host of potential risks and unintended consequences. Section 3. Market jitters and warning signs. The markets are like a flock of easily spooked birds. Just as a sudden noise can send birds into a chaotic flight, unexpected news or economic data can trigger a frenzy in the financial markets. Investors, much like these birds, react swiftly to any perceived threats or uncertainties. And lately, they've been in a frenzy. The trading floors are abuzz with activity, and the tension is palpable. Traders are on edge, reacting to every piece of news with heightened sensitivity. The volatility is evident and the atmosphere is charged with uncertainty. The Dow Jones Industrial Average, the S&P 500, the Nasdaq, all major indices have taken a hit. The red numbers on the screens are a stark reminder of the market's current state. Investors are seeing their portfolios shrink, and the confidence that once buoyed the markets is waning. It's not just the stock market sending up flares. Across the board, warning signs are emerging. Business leaders are expressing concerns, and financial analysts are issuing cautionary notes. The ripple effects of market jitters are being felt in boardrooms and beyond. Economic indicators are painting a worrisome picture. Consumer spending is down. Manufacturing output is slowing. These indicators are critical as they reflect the health of the broader economy. When consumers tighten their belts and factories reduce their output, it signals deeper issues that could lead to a prolonged downturn. And the housing market, a key driver of the economy, is showing signs of cooling. The once hot real estate market is now seeing a slowdown. For sale signs are staying up longer and prices are beginning to stagnate or even decline. This sector's health is crucial as it impacts everything from construction jobs to consumer confidence. In these uncertain times, investors are seeking guidance and reassessing their strategies. Financial advisors are working overtime to help clients navigate the turbulent waters. The key is to stay informed, remain calm, and make decisions based on sound analysis rather than fear. The global nature of today's economy means that jitters in one market can quickly spread to others. International stock exchanges are also feeling the pressure, and economic news from one part of the world can have ripple effects globally. It's a reminder of how interconnected our financial systems are. As we move forward, keeping an eye on these warning signs and understanding their implications will be crucial. Economists and analysts will continue to monitor trends and provide insights. Staying informed and prepared can help mitigate the impact of market jitters and navigate through these challenging times. Section 4. Experts sound the alarm. Economists, those perpetually worried folks, are starting to panic. They're warning that the administration's policies could be pushing the country towards a recession. Tariffs, they argue, are disrupting global trade and creating uncertainty for businesses. This uncertainty can make businesses hesitant to invest and hire, further slowing economic growth. Section 5. Public confidence shaken. The average American might not follow the intricacies of economic policy, but they know when things feel shaky. And right now, things feel very shaky indeed. Consumer confidence, a key measure of economic health, has plummeted. People are worried about their jobs, their savings, and the future. This lack of confidence can lead to decreased spending, further weakening the economy. Section 6. Administration unfazed. Despite the market turmoil and growing anxiety, the Trump administration remains steadfast in its belief that its economic policies are working. They argue that any short-term pain caused by tariffs will be outweighed by the long-term benefits of protecting American jobs and industries. They point to the strong economy of the recent past as evidence that their approach is working. Section 7. A road to recovery or ruin. So, are we headed for an economic boom or bust? The financial landscape is more unpredictable than ever, with market volatility becoming the new norm. Investors are on edge, constantly refreshing their screens for the latest updates. The stakes are incredibly high, and the decisions made in the coming months could shape the economic future for years to come. Are Trump's policies a path to recovery or ruin? His administration has implemented a series of controversial measures aimed at stimulating growth, but opinions are deeply divided. Supporters argue that deregulation and tax cuts will spur investment and job creation, while critics warn of long-term fiscal irresponsibility and widening inequality. It's a question that has economists, policymakers, and everyday Americans on edge. The uncertainty is palpable, and everyone is looking for signs of what might come next. Will the economy bounce back stronger than ever, or are we on the brink of another recession? The answers are far from clear, and the stakes couldn't be higher. One thing is certain, the stakes are high. The decisions made by policymakers will have far-reaching consequences affecting everything from job security to retirement savings. The pressure is immense, and the margin for error is slim. A single misstep could trigger a cascade of negative effects, impacting millions of lives. A recession could have devastating consequences for millions of Americans. Job losses, home foreclosures, and increased reliance on social safety nets are just a few of the potential outcomes. The human cost of an economic downturn is immeasurable, affecting not just financial stability, but also mental and emotional well-being. Only time will tell if the administration's gamble will pay off, or if it's a bet that will cost us dearly. The clock is ticking, and every decision counts. As we navigate this uncertain road, one thing is clear: the future of the economy hangs in the balance, and the outcome will shape the lives of generations to come.